Hello, everybody. Once again, it was another solid day for the stock market overall. However, I tell you what, it's getting a little ridiculous here. I'm going to go ahead and widen out my price chart, even though I don't like it because it just makes it easier for everybody to see. But I hate to tell you this, folks. Let's just compare all these V-shaped rallies in the Dow in the Diamond Spies. You can see that this was crazy, that was crazy, that was crazy. Okay, this is a little crazy, that's crazy, this is even more crazy, but look, there's still more to come. But okay, that's retarded right there, but even this is a little bit ridiculous. Okay, well, that's a little nuts. Well, geez, here we go again. So, if anybody feels like they're either underinvested, not doing very well in this market, and or if you actually have losses, don't beat yourself up. This is pretty crazy. Just looking at a 2-day. I mean, you can see this has been the norm since 2010, actually. I mean, even 2009 to 2011, the market rally, very V-shaped. We just don't have much of what was actually more proper and healthier. The 2003 market, while that was crazy, you can see that there was at least like 3 retests of a bottom level here. '09, we didn't see it. We kind of saw it in 2010, but still choppy. 2011, just a couple, and then just as crazy. I mean, we've got 2 here, and hopefully maybe, it turns into 2003 kind of rally here. But for me, it seems like we would have to have a bigger sell-off to really get the kind of 2003 rally. But if you look at 2004 to 2006 and 7, that's ideal. I mean, that's kind of what you want to see. We had a lot of big winners during this time period. You can look at the past big winners. When a market kind of trades like this, it's going to be hard to make a lot of gains, so don't beat yourself up. The NASDAQ was actually higher today, 0.47%. As you can see, though, with the intraday tail off the highs of the session, it appears that maybe now here at the 200-day moving average, we're at resistance. Volume is lower than the session before, so at least we reversed on lower volume, so it really didn't have a real strong feel of churning. It just appears that we've gone too far too fast. I mean, just look at the NYSE off the February lows, straight V shape. We were starting to pull back nicely here, but man, this is too early to be breaking out. We need to consolidate more, and even if that causes me to cut some losses, if that allows me to get better chart patterns where I can put more of my capital at work to get bigger returns, I'm all for it. But for now, the market, it needs to pull back. We really need to see it calm down here. The Russell 2000 even, it would just be better if we could get this thing to move sideways and so that we can at least coil into the 50 and 200-day moving average converging on the price levels, because right now it's sloppy. I'm sorry, guys. It's just very sloppy. I can't say that I love this rally. It's nice, but it isn't anything great yet. So with that being said, let's just go ahead and get straight to the long positions. Let me try to make everything right here again. I'm going to go over some of the stocks that I'm passing on, just to let you know that there are stocks trying to set up out there. OLED, CanSlim Perfect Speculator Quality. This stock is going to need to, it's basically building a cup pattern now, needs to really build a handle here. And I would like to see BOP get a little bit stronger, but volume pattern is already pretty okay. But damn, the stock is choppy. But this is one of the names that I really want, but I noticed it today, so keep an eye on it. HCII, nice move here off the lows. It's already had a few pocket pivot point signals. If this thing would have closed above 23.21, I probably would have considered buying HSII because we would have had an extremely excellent potential reward to an extremely limited risk position here. It's CanSlim quality. It's got very little negative BOP in it, which means it's under some steady accumulation overall. But as it is, it didn't close strong enough, so I'm going to pass on it. Just want to bring it to everybody's attention. Also CHKP, decent breakout, not a whole lot of volume behind the move. AVAV, I like it a lot, but preferably would have liked to have seen it have closed above 28.56 today, or volume to have been higher, and or BOP to have surged stronger, because it doesn't have the earnings and sales growth that makes me want to take a position and end this imperfect chart here. So AVAV is another one, and then IIVI, another CanSlim quality name, but the earnings and sales isn't quite there to buy a stock that's basically still in a consolidation pattern. It needs to spend more time getting sideways so that 200-day moving average can try to catch up. But more positive BOP and volume action with the moving averages getting closer. I would consider IIVI as a future long, and then probably the better one that I'm passing on tonight because it's got some nice growth here. I actually have it up already, CCRC. You see the earnings, you see the sales growth, it's pretty strong, pretty solid. It's got return on equity and cash flow that's pretty positive, but only 2 mutual funds are in this stock, and I want to know why, because whenever you look at some of like the stronger stocks like BITA, it has like 120, HIMX has 76, Baidu has 1,552. So all these small Chinese stocks with great growth, whenever they only have 2 mutual funds, it's because maybe, the big guys know something more than me. So for now, pattern's too early. Maybe if BOP would have surged to max green BOP and we would have the 10-day above the 20-day moving average, I think differently. But for now, no. But the bottom line is at least there's some out there. The long positions I am going to take for this evening, first off, there's no sells, there's no covers. We still have one short position, Netflix, and it's still a hold. But I actually have 2 new long positions for the session on Thursday. UA is producing another pocket pivot point signal on strong volume. I know volume overall has been very low, but you know what? That's actually really good considering that it's consolidating a big surge off the lows here. It looks to be a turnaround play, which in the retail space I'm always interested in. Let's pull it up. UA. You can see that earnings are growing sequentially each of the last 2 quarters. Went from a negative number, turning around 1020. And sales are growing each of the last 2 quarters. Well, not really growing each of the last 2 quarters, but each of the last 3 quarters. From 25, 29, 28, 31. I wish it would be like 29, 30, 31, but still close enough, especially with the earnings estimates over 25%, even though they're being lowered each quarter. This is still a strong enough chart with a low enough risk overall that I want to take it. So if we're wrong on the position, I get long at 85.64. I get out at 81.26. I only lose a little over $4 per share. I can get long probably 100 shares of this name before I'm really starting to worry about the dollar loss amount because it's such a high quality name and it does appear that it has bottom. So UA, to cancel quality, 2%. Also, IGT, cancel quality stock, make it a pocket pivot point signal today. Another bullish intraday reversal since it's gap up back here on the 17th. It's had green BOP the whole way. BOP actually increased a little bit today. Good volume characteristics overall. The main thing, it's hard to see here, but it's actually closing higher than where it opened. Overall, pretty good. Got a clear-cut loss level right at 16.98. It's only going to lose $1 a share. So, I can go a little bit bigger in this one. So it's going to be 2% for Can Slim. And then it was also confirmed in my price volume BOP scan. So we'll make it 1% for a total of 3%. Once again, not a perfect chart. The 50 is not above the 200. But you can see that the 20 is close, but once again, not touching, so it's not perfect. But the 10-day moving average is at least there. And on UA, you can see you've got the 20 and the 10 touching and the 10 above the 20, which also makes it a better long position. Plus, as you can see, the price is coiled in between the 200 and 50, even though the 50 is below the 200. Compare that to IGT, where still we're pretty extended from at least 2 moving averages if you include the 20-day moving average. So not as good, but 3% still because the final cut loss is right there, 16.98. And then I got to add signal MNRK today. MNRK, Can Slim quality, 1%. It was also in my max green BOP for at least 5 days scan. So that's 0.5% for a total of 1.5%. It was also basically, it would have been, I should say, in my price volume BOP scan. As you can see, the volume surge is absolutely huge compared to its average. But since it only averages around 25,000 shares per day, it obviously didn't make that scan because it looks for a minimum volume of 50,000 shares a day. So it was only in the Can Slim 1, BOP scan 0.5. Plus I want to keep it kind of small because it's we already have a long position in already. Final cut loss on the ad signals with the move below 16.13. But this is a very nice technical pattern. One of my favorites out there overall. So that is it. MNRK ad, UA new long, IGT new long, no sells, no covers. Going to raise some stops on SIMO. Going to monitor PACW. Raise some stops on PATK. GSG need to monitor. PRAH I need to monitor. YORW raising some stops. And GSI, first sell stop now goes below 180. Final sell stop below 170. So I'm going to chop it up into half and halves since it's not moving up immediately like I expected it to.